Tesla stock exploded higher today at the time of recording this video, up about 8.5%. And we have a lot of breaking news to cover in this video. In terms of the broader markets, escalations in the trade war, CPI data that came in better than expected, and some pretty big news from Tesla. Now, I actually think one of the biggest things that is causing Tesla to move higher today, there's quite a few, is a secret message from Elon Musk. Elon, after being sued many times, he really can't come out and make statements that could get him sued, okay? He has lawyers that have to go over, like, literally read his posts before he's allowed to post them, okay? Or at least that was the case before. That may have changed, but that's how dramatic this situation is. So if Elon, really wants to tell you something, let you know how Tesla's doing, sometimes he has to do it in pretty secretive ways. And Elon Musk shared this. This is a clip from Jeff Bezos. Take a listen and tell me what you get out of it.
Because the stock is not the company, and the company is not the stock. And so as I watched the stock fall from 113 to 6, I was also watching all of our internal business metrics, number of customers, profit per unit, everything you can imagine, defects, etc. Every single thing about the business was getting better and fast. And so as the stock price was going the wrong way, everything inside the company was going the right way. And we didn't need to go back to the capital markets. We didn't need more money. The only reason, a financial bust like the internet bubble bursting is, makes it really hard to raise money. But, we already had the money we needed. So we just needed to continue to progress.
So in some way, shape, or form, by Elon sharing that, is telling you that Tesla is doing much better internally than the stock is suggesting. Now, how extreme is that? Is Tesla really excelling internally? Is all of the delivery concerns overblown? Is there no demand destruction? Are they really making progress on FSD and Optimus and excelling the business? We don't know how extreme that is. It could be extremely good, or it could just be better than we expect. But either way, Elon sharing that, clearly the only publicly traded company that Elon owns is Tesla. It's specifically about Tesla. It's telling us positive things are happening internally at Tesla. Again, Elon cannot just come out and say things that could get him sued. Imagine if Elon came out and said, yeah, this is going right, this is going right, that's going right, and then the stock falls another 50%. That's not gonna look good, and you could probably get sued from that. I mean, you could sue pretty much everyone for anything these days. And I actually think this has a lot to do with Tesla rallying now about 8%. It's going to be volatile in the last hour or so of trading today. This could totally change, but you are seeing a nice recovery today. Now, you are sitting right here at a major resistance level, and it will be key to see if we can break above this, because last time we did, you gapped up on November 6th. Tesla stock went up almost 15%. The last time you broke above 250. Okay, and there was a lot of resistance here. This is actually a trend line connecting the peak in July of 2023 right here. The peak in July of 2024, so a whole year later. The peak October, 1st, and then right before the election, late October, and then you gapped up after the election, and the rest is history. So it does look like you are getting some resistance around that 250 level. And if we can break that, I think that could spark a larger move into that 280-ish range. But we're so news-driven these days, unfortunately, I don't think that is going to happen. As I've expressed many times here on this channel, I think these rallies will be sold. Okay, I think we're overdue for a bounce, and that's mainly what is happening today in markets. Generally speaking, we've needed to bounce for a while. If you take a look at XLP, XLP is the staples ETF. So like Walmart and food companies are going to be in this, right? Energy companies potentially. Companies you really can't live without. Okay, XLP is down almost 2% today. Momentum, the MTUM, the Momentum ETF, is up 2%. So this is a really good sign for a short-term bottom. Okay, people moving away from staples, in which they were kind of crowding into staples in the last couple of weeks. But you've already seen XLP sell off 1, 2, now 3 days in a row, with momentum that has started to recover for now 2 days in a row. I don't know how long this lasts, but it's not a very enduring sign to me until something changes. And nothing has changed yet, and people still have the same recession concerns as they had before. Now, if Trump backs down from the trade war or something along those lines, then that would obviously constitute a larger rally in broader markets. But until something changes, then you're going to see markets continue to sell the rips. For the SPY, that could mean a potential bounce to this 200-day moving average. Up to about 570 on the SPY would not be too outrageous, but from the low of this correction yesterday, you've already rallied. Let's see, specifically 552 to today. You've rallied about 1.28% at the time of recording this video. At the high of the day today, it was a 2% rally from the bottom. So like, the problem is the intraday moves are so large. Sometimes you're getting a 2 or 3% bounce from the lows intraday, and then you just sell off the next day. You're technically getting the bounce, but you're not holding the bounce. So could you bounce further? Sure. But it's a headline driven market, and I don't think it's going to get better anytime soon. Now, also in the news today, Marjorie Taylor Greene, a Republican, I believe, in the House, I want to say, not, politics really are not my specialty, if you did not know. But she says attacks on Tesla must be investigated as domestic terrorism. Today, my Doge Committee colleagues and I sent a letter to Attorney General Pam Bondi and FBI Director Kash Patel, asking for an investigation into the wave of organized attacks targeting Elon Musk, Tesla, and the Doge effort. Who is behind it? Who is funding it? Is there a link with Democrat-leaning NGOs? We look forward to expressing these terrorists and bringing them to justice. Now, in all fairness, Marjorie Taylor Greene owns Tesla stock, and she has been buying the dip in Tesla in recent days even. On January 8, 2025, she purchased Tesla shares in 4 different accounts, with each transaction valued between $1,000 and $15,000, totaling between $4,000 and $60,000. Additionally, on March 7th, so just a couple of days ago, she bought another batch of Tesla stock valued between $1,000 and $15,000. These transactions were disclosed in filings with the House Clerk's office between January 27th and March 9th of 2025. Respectively, prior to taking office in 2021, she also held between $15,000 and $50,000 worth of Tesla stock, indicating a consistent interest in the company. While the exact current value of her holdings is not specified due to the range-based reporting requirements, it is clear she owns Tesla stock as of her most recent disclosures. Now, also in the news today, Sean Hannity, as promised yesterday, he writes on X, I just ordered my new self-driving Tesla. Over 1,000 horsepower, 0 to 60 in 2 seconds. I mean, this post has 30 million views. I think it's safe to say that while you have some people that are protesting the Tesla brand and some people that are acting cowardly, to say the least, there is the other half of the country that really was not the target buyers for Tesla, that may be opening up to buy a Tesla. So it's really uncertain whether this is going to be a positive or negative for Tesla in the short term. You could have a positive impact on Tesla's deliveries based on a whole new group of people that may now be interested in buying a Tesla, which you didn't have prior to this. Conservatives were really not in the market to buy a Tesla. Now they may be. Question is, how many, Democrats or independents are leaving the Tesla brand? And it's impossible to quantify, but it would be like, buying a Samsung or Galaxy when you're an iPhone user because you disagree with the decisions that Tim Cook was doing politically. Like, it doesn't make sense to downgrade to a worse product because of what one person is doing. So I actually think this could be a net positive for Tesla stock, and I think Tesla's recovery today is kind of suggesting that. Although, again, Tesla has fallen a lot recently, I think mainly because of recession concerns, not really some of the headline bad news that you've seen recently. I think more than 50% of Tesla's fall, is because of recession concerns. Auto companies are not the place to be if you go into recession. High beta companies, not the place to be if you go into a recession. High valuation companies, not the place to be during a recession. Even with a company like Tesla that is in, or pursuing businesses that are going to be huge in the future. Like, even if they're mildly successful in robots and robotaxi, like, the market is so big, it's going to pale in comparison to anything that Tesla is doing today. But if you're going into a recession, people do not want to take a chance, right? People do not want to give a company the benefit of the doubt. And I think that's a lot of the sell-off in Tesla so far. And when in doubt, just Google Trends it. Results for, quote, buy a Tesla have surged in recent days to a multi-month high, with notable increases in Republican-leaning states such as Nevada and Florida. I mean, I talked about this first, that Republicans may be opening up to buy a Tesla. And it seems like that could be starting to show up in some of the data. Now, Google Trends is not really, hard data. It's not deliveries, but people searching about Teslas to buy a Tesla is a step in the right direction. Now, searches for sell my Tesla are dramatically lower, clearly, than buy a Tesla. And courtesy of images from Joe Tetmeyer at the Texas facility, there's more work being done. Cybercabs continue to just do their thing and drive around autonomously at the factory. Now, here on the day today, option activity from hedge funds and institutions is coming in a lot more positive than we've seen recently, with a positive order value of 66%. You have 202 different trades totaling $150.28 million. If you take a look at what the shorts are doing today, they're covering about 30,000 shares, which, again, yesterday you had about 2 million shares that were covered. So this follows the same trend we've seen recently of hedge funds and institutions covering on short positions. Although, as Tesla has fallen 50% from all-time highs, the short interest has only moved up marginally from 2.13%. That's the lowest short interest you've ever seen in Tesla's history, with about 59.6 million shares sold short. You've only moved up to 67.13 million shares sold short. Short interest of free float now at 2.4%. So, I mean, with the stock falling 50%, shorts are really not the main driver behind that. A lot of people have gotten shaken out of their positions. And while that's unfortunate, this drop in Tesla presents an opportunity for savvy investors that do not have that emotional component to their investing strategy to capitalize on this situation, because there's a good chance that Tesla could be much higher than where it is today by the end of the year, as long as we avoid a recession, which I would say is 50-50. So, like, it's not a slam dunk that this is the lowest Tesla's going to go, that this is a great price to buy Tesla, but there's a 50% chance that it is. That Tesla could double, triple, or 4x potentially from here, even by the end of this year. And that's not me saying this. Morgan Stanley's Adam Jonas says this. They say that Tesla, below election price, was $200. Then could it hit $800 by the end of this year? That would imply a 300% rally that, quote, they say could happen within 12 months. Morgan Stanley says this is a huge buying opportunity. They specifically note that this is an AI play, as Tesla is a, quote, embodied AI compounder. Morgan Stanley believes that the recent drop is due to negative brand sentiment just as much as fundamental sales data and market degrossing. Furthermore, Morgan Stanley believes the drop is largely sentiment-based. They note that their discussions with investors were all about Tesla being the, quote, AI winner at the December record high of $488. Now it's back to, quote, management distractions, which we have seen multiple times before. They say, given the upcoming catalyst and the nature of Tesla's trading history, we see scope for the shares to test our $200 bear case and our $800 bull case within the next 12 months. We expect the key drivers of the stock will continue to include a wide scope of forces ranging from commercial, macro, geopolitical, technological, strategic, and management specific. So basically saying there's going to be catalyst everywhere you look for Tesla. And long story short, you could fall to $200 per share, as in their bear case, and you could hit $800 per share within the same 12-month span. And that just really means expect a lot of volatility. Now, also in the news today, the EU said on Wednesday it would impose a counter tariff on 26 billion euros, about $28.33 billion worth of US goods starting in April in response to the tariffs. And Canada announced today they will impose 25% retaliatory tariffs on $21 billion worth of US goods. The new tariffs cover steel and aluminum, as well as other US goods, including computers, sports equipment, and cast iron products. And the big story today was really CPI. Core month over month came in at 0.2%. Expectations were 0.3%. So that was better than expected. Core year over year came in at 3.1% versus expectations of 3.2%. So that was good. Headline inflation came in at 0.2% versus 0.3% as was expected. So that was better than expected. Year over year headline came in at 2.8% versus the expected 2.9%. So across the board, softer than expected CPI. That's positive. But the interesting part about today is bond yields actually didn't respond the way you would expect. We had better than expected CPI, and 10-year treasury yields went up about 1.5 basis points today. I think this is largely computer driven, and what's really happening today and what you've seen recently is bonds have been bought as stocks have fell, right? So you've seen the 60-40 portfolio working as designed, okay? Well, today you should have seen bonds go up, bond prices go up, bond yields fall. So you should have seen TLT rise. Instead, it fell today. Okay, and you should have seen stocks rise, and you did see that. So something weird is going on in the bond market, and bond investors are kind of confused, and it seems like right now bonds and stocks are just competing with each other, right? So things are not acting rationally. This also means that the probability of Fed rate cuts fell today. So with a softer than expected CPI, you would expect the odds of rate cuts to actually go up. They fell. So the odds of a May 7th cut, well, pretty much dissipated. I mean, yesterday you were sitting at almost 38% odds of a May 7th cut, and now it's at 28.9%. So you fell like 10% today with softer than expected CPI. Now, June 18th, the probabilities for a cut still intact, 57.7%. and actually moving up. So short term, the odds of a cut fell, but when you look at June, the odds of a cut went up a little bit. Just very strange given CPI came in better than expected today. Now, Trump said today, quote, the U.S. to impose reciprocal tariffs, claims EU and Ireland took advantage of U.S. tax and trade policies, vows to respond to EU counter tariffs, targets the trade deficit, says EU blocks U.S. farm products and cars, confirms auto tariffs are coming, and calls Canada, quote, one of the worst on tariffs, citing dairy disputes. And Trump said this about the EU's reciprocal tariffs, quote, we'll win that financial battle. So, suggesting that there is going to be a larger trade war with Europe. Europe really hasn't seen the trade war yet. It's been Canada, it's been Mexico, it's been China, which those are our three largest single country trading partners. But some European countries like Germany, the UK, and France are also big trading partners. So it could get noisier. Donald Trump says he is not happy with the EU. Trump said specifically the EU has gone after our companies like Apple. Trump says that he can pressure Russia, but he hopes it won't be necessary. It was reported today that Russia is planning on following through with the ceasefire with their own conditions, and we don't know what those are. Trump said today there will be flexibility on tariffs, but there will be very little flexibility once we start. So don't know what that means. Now, the incoming Canada Prime Minister Carney says that he is ready to meet with Trump and looking for a common approach. He said again, we are ready to sit down with the US government and with Trump to discuss tariffs and trade. And I do think that is really the reason for the bounce today, is some renewed optimism that tariffs could get sorted out and there could be a deal made. But again, I think Trump is really just trying to push us into a recession to lower interest rates, to kill inflation, and get back to business as usual afterwards, right? That it's tricky though. You can't really stop a recession once it starts, okay? But I think that's the idea here. And I think cutting deals in the trade war doesn't lower treasury yields. Maybe it helps, with some of the inflation concern, but it doesn't help lower bond yields directly. And that's really what the president is after. They've made it clear. And I don't see the trade war just ending anytime soon. The areas that we're attacking could change, and you should expect that. But I don't see the trade war ending anytime soon. And until there's some clarity there, until the situation is not as liquid and evolving, Wall Street's going to continue to sell the bounces, sell the rallies that we get. Now, Italy's economy minister says that tariffs announced by the U.S. administration could hurt Italian and EU economies, with ripple effects on global trade. Now, Canada's foreign minister Jolly says Canada will work with Europe to put pressure on the Trump administration, and it's like, good luck. That's what Trump is vying for. He's trying to create this uncertainty. He's trying to create a larger trade war to slow down business investment, to again push us into a recession. That is exactly what Trump wants, from everything I can see. I mean, there's no other reason why he would be doing this other than to push us into a recession. Like, that is the obvious outcome of all of this. And we did get some weird news from the World Trade Organization. It says European exports and imports were much weaker than expected, while Asian exports and North American imports exceeded expectations. I think this could be some of that pull forward effect from the tariffs. Everyone knew tariffs were going into effect, so they were really importing as much as they possibly could before the tariffs. And I think that's been very well represented in the data. That's part of the reason why the Atlanta Fed GDP Now tracker is tracking, negative 2.4% Q1 GDP, because we've had a lot of imports and not a lot of exports relative to imports. Also, again, consumer spending being down, retail being down, that's also a contributing factor, but it does seem like the trade is really weighing on GDP. Now, the CNN Fear and Greed Index today is sitting at 20. You are in extreme fear with all of your major categories in extreme fear, besides market volatility that's now only in fear, and junk bond demand that's in extreme greed. The percent of stocks trading above their 50-day moving average actually falling a little bit today, negative 0.65%, down to 23.6%. So you're still, again, at a very negative level. Only 23.6% of stocks are trading above their 50-day moving average. So, is there room to bounce here? Yes. But is it going to be a sustainable bounce? That's the real question. Again, the AI Investor Sentiment Survey over the past 2 weeks has been very bearish, not bullish at all. We will get a new one coming out Thursday, so coming out tomorrow, and I think that'll be important to kind of piece together the sentiment picture that investors currently have. We do also have some important earnings over the next 48 hours or so. Today and after hours, you have Adobe, UiPath, Centennial One, Crown Castle, American Eagle Outfitters, some others. Thursday pre-market, you have D-Wave and Dollar General, so tomorrow morning. And then Thursday and after hours, you have DocuSign, Ulta Beauty, and Semtech. So a lot of those consumer names, something like Adobe could be considered like an AI software. So important sectors, I would say, to watch. And here at the time of recording this video, the Dow is up 0.25%, S&P is up almost 1%, NASDAQ up 1.64%, Russell 2000 up 0.16%. Again, with CPI coming in better than expected today, you would think the Russell would be outperforming. It's not. Okay, it's the underperforming index, which is kind of still a nod towards those recession fears. People are not rushing out and buying the recession sensitive, index, which is the Russell. They're continuing to be more defensive, with really Mag 7 saying a lot of the bid today. The VIX is down about 9%. You're still elevated. You're still at 24.44. But you are making progress today. And again, I think it's mostly just computer driven, and you really haven't seen the capitulation moment yet. And don't be surprised if this bounce is very short lived and fear comes back into markets. And, there is an old saying on Wall Street that Wall Street will stop panicking when policymakers start panicking. Policymakers are not panicking yet. The Fed's not panicking. Trump's not panicking. In fact, they don't give a crap what's going on with markets, right? When policymakers start to panic and start to pivot and U-turn, and the Fed starts to be dovish, or, Trump backs down from the trade war and acknowledges that the stock market has fallen too much, then that's when markets are most likely going to bottom. But markets are probably not going to bottom until policymakers, quote unquote, bottom or panic. So let me know what you think about this information down below in the comment section. Again, we are facing recession risk this year. It's uncertain though. We don't know, if this negative Q1 GDP print is going to hold, what next quarter is going to look like, or what's going to happen with the labor market. Like, are we actually going into recession? If we do, there's a ton of downside from here. If we avoid a recession, how strong is the economy? There's a lot of uncertainty there. What's corporate profits going to look like? Slapping tariffs on different sectors, and what's the ultimate, reciprocal tariff outlook going to look like, and how's that going to affect profitability? I don't think the bottom is in, although I've been calling for a short-term bounce for a while now. I think that's all this is. Trade that if you would like, but once we get back close to that 200-day moving average, that's the moment in which I would be looking to short the markets again, to hedge the downside. 300-day moving average around 546 is also gonna be a level you might find some support, and then ultimately you could be making your way down to that $500 level in due time. That would be a 18% pullback from all-time highs, almost 19%, and then we'll see if recession actually comes or not. But I don't think this is a market you have to FOMO back into. I don't think, we're heading straight back to new all-time highs or anywhere even close to that, if you want my honest opinion. So let me know what you guys think down below in the comments section. Have a fantastic rest of your day, and I will see you in the next one.